what works. I can tell you what doesn't work. Cold calling does not work. Cold calling is dead. We should bury it. Founders, at least first-time founders, they always want to do it by themselves. We started growing, but we didn't grow to the speed, to the pace that we wanted. I think venture capital is basically an industry where if you are working in it and you're working as an investor, it really doesn't hurt to lose money. 1 out of every 10 times that you will invest, it's going to work. And hopefully that one time will recover the money that you invested in the other 9 times. And also from an investor perspective, you cannot invest in venture capital unless you are ready to lose at least 250,000 euros. And then the question was, do we want to continue? Do we want to raise more money? Do we want to close it? Do we want to sell it? We tried a couple of things, but no one wanted to continue. So we decided to basically close the company.
So this is Juan, and yes, probably a LinkedIn that will make anyone jealous. 15 years of experience, venture capitalist, not just a doctor, but a professor doctor. He has been doing so many things from aviation. Is teaching in value chain or supply chain. He's now in venture capital. I mean, it's like a master of all trades for sure. And I'm definitely very happy to have him here, because not only I think he shares stuff that's super insightful, and he has a very, very interesting past and professional experience, but also at the same time, he has something to share. I had a look at the presentation. It's very interesting. Part of it is in German, but Juan is going to translate at the same time. So he's the kind of person that, aside from everything, speaks at least 3 languages that I know. So yeah, it's going to be fun. I don't know if you want to share anything from yourself as well.
Well, thank you for inviting me, dear. I was reminded this week. I think this is the second time that I'm reminded this week that I'm getting older. When people look or see what I have been doing, but basically you summarized it. I'm an engineer. I work in management, and then I moved over to a couple of little things. There was a time even when I was also doing languages, and I was a Spanish teacher. So that is something that you won't find on my LinkedIn, but that's something that still it happened, and I still find myself in restaurants or in clubs or in places here in Berlin, and some students from my Spanish era, they recognize me and they come and say hi. So I'm very happy to be here today, and I hope some of the things that I can share with you and with everyone in the platform are interested, and that they are insightful for something.
Okay, so you're telling me that it's not just 19 professional experiences. Absolutely crazy. All right. For this session, I would like us to focus on venture capital, and just as a starting point, what the hell is venture capital?
That's a great question. I think venture capital is basically an industry where if you are working in it and you're working as an investor, it really doesn't hurt to lose money, because from the very, very beginning that venture capital, it's something that is not probably going to work. Yeah. 1 out of every 10 times that you will invest, it's going to work. And hopefully that one time will recover the money that you invested in the other 9 times. So from an investor perspective, venture capital is one of the assets where you can invest. That is one of the last ones. Yeah. You better start by real estate. You better start by other places. And venture capital, it should be one of the last options, because basically, you shouldn't invest in venture capital unless it's not going to hurt you. Yeah. And also from an investor perspective, you cannot invest in venture capital unless you are ready to lose at least 250,000 euros. That is what the law says. You need to have some kind of certification where your assets will be checked, and they will say, okay, if this person loses 250,000, it's not going to be a big problem. Venture capital also allows people to make dreams happen. It's also an industry where basically people, you're working against what people think it's possible. Yeah, you're working against what people are used to it's possible. And most of the time, I would say, people will tell you what you're working on is not gonna, it's not gonna work. Yeah, it's not gonna be fruitful. So from a founder perspective, you gotta also be very you have to be very confident on what you're working on. And once you're moving to the venture capital spectrum of money, people are going to tell you it's not going to work. Like, why would I invest? Yeah, so it's I would say a very niche market, a very
Mhm.
niche market, and a very special way of working, but it allows you to really have big dreams and to find the capital that will make those dreams come true.
Okay. But let's take this from a more of a persona perspective. Um, so there's the, I feel like the answer is more from someone outside looking into
Yeah.
venture capital. But I would love to know more about two other types of personas, which would be the one who does venture capital, so someone like you, and also the person on the receiving end of venture capital, right? So and let's start with the first one, right? So can you share about like your mindset, the way that you work, and what is like your day to day as a venture capitalist?
Yeah. So yeah, of course. Let's start on the venture. Let's start on that side of the table. So from that side of the table, it really, I would say, it's a type of work that is not perfectly something that you can build a routine. Yes, because it's gonna be very similar. It's gonna be very different depending on which stage of the venture capital you are, and on which stage also of the investment cycle. Yeah, if you're in the very beginning, maybe tell let me tell you a little bit about what we do and what we did 7 8 years ago. At the very beginning of opening your own venture capital, what you're trying to do is you're trying to build a name. No one knows you, no one knows exactly what you want. No one knows the vision that you have. And what you do as a venture capital list or a venture capital investor is you build a name by going to events and pitching about topics. You're going to events and sponsoring those events. You're going to places to put the name of your company so everyone knows. If I want the X person, if I want money for, let's say, I don't know, e-commerce. Yeah, everyone knows that they should come to Juan, and Juan is the one that you should go to if you have those kind of things. So, the very first 2 years or 3 years, it is a lot about traveling to events, you name it, whatever, from Web Summit, yeah, all the way to Slash in Helsinki, yeah. So you cover all the region where people want to get to know you. In that particular time, you're also doing a lot of interviews. You're also putting a lot of PR and marketing, a lot of money in there, and you're making sure that you build a story for the venture capital. Why am I telling a story? Just as the same way that startups, yeah, and founders, they need to pick a story and they need to say why they believe in what they believe in, why they're building what they're building. It's pretty much the same thing. Actually, some people maybe not agree with me, but I would say that venture capital investors with the very first in investment fund, it will be very similar to having a
But
startup.
why wouldn't they agree with you? What's like the antithesis to
The
what you're
answer
saying?
is normally what you think about when you think about an investor. You think about someone that's very confident. You think about someone that knows their numbers, and you think about someone that has a lot of experience. That's not true in all of the occasions. Venture capitalists also at one point in their life they start with the very first investment company, and the first investment company, Diogo, is like having a startup. They're doing it for the first time. Most of the time, the money is not entirely their money. Yeah. So legally speaking, when you have a fund, 1% of the fund, it needs to come from the people that's managing the fund. So if I have the fund of Juan Ocampo and I'm investing in e-commerce, at least 1% of the 100 million euros that I'm investing, it comes from me. But 99% of that fund comes from other people, that money. Yeah. So sometimes it is the first time that you do it. And you're trying to understand also if what you think about how the industry will work and how founders are behaving and what they're doing, it's also assumptions that you have. And you also need to confirm or reject those assumptions. And this is something that you don't do it on, on a public place. You don't go to Alexanderplatz and yell, "This is what I think it's happening." It's pretty much something that's
Just as a side note, Alexanderplatz is a big park or big area here in Berlin.
a
So
big
it's like
square.
a whatever Central Park of New York. So
Yes.
if you wish to make a comparison,
I mean, the New Yorkers will be very angry that we compare right now that to Central Park, but yes,
it's for
you will get
illustration
along.
only. I don't want to upset anyone. Just as a second side note.
But it's like a public place. You won't go to a public hall and just yell, "I'm going in the right direction or wrong direction." Just like with every company, people will always yell, I'm doing good, 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 good," and you'll see this communication also from the investors, and it's happening the same thing. I, as a venture capital investors, I also have investors. They're called LP, limited partners. And those limited partners, they want to know how their money is growing and growing and growing, how
Mhm.
I'm making the best decisions for their money. So it's also like having a startup. Yeah. So from that perspective, they're also building a story. You're also trying to understand, do I really want to go into this specific thing? Do I really want to start sponsoring that specific topic? It's
Mhm.
pretty much on the, it's very, very similar. So that's why I'm saying not a lot of investors would like to be compared to startup founders, but at the end, we are sometimes at the very beginning, at least.
All right, cool. That is interesting. I have never thought about it. I'm not
Yes.
saying that I disagree like the other people, but I
Yeah.
guess I would need to think a little bit about it. I wanted to cover a little bit. You used to work or to manage a startup called Skyflare. Is
Yes.
that right?
Yeah.
I think I even went once to your office, and yeah, like as a general context, I was wondering if you could provide a little bit of how Skyflare, appeared. How did you end up managing it, and how was the exit process?
Yes. So I am one of those people in every area, not just in venture capital, but in every area that if you're gonna talk the talk, you better walk the walk. Yeah. So I think it's pretty much it makes me a much better investor if I have been also on the other side of the table, meaning on the founder side. Yeah.
Hmm.
That makes it easier for me to understand and to invest. That makes me better, and also it's something that you're offering to your own investors. So from that perspective, or that being said, Skyflare is, or it was a cybersecurity company that was founded in 2023, officially in 2023, but we were discussing the idea of founding a Skyflare back in 2020 when the pandemic started. And the main idea came from one of my closer collaborators that I met at a startup back in 2018, 17. And he was my CTO back then. And we made a great team, and basically we wanted to found something together. Yeah, he comes from the cybersecurity spectrum. He was a CTO for one IBM company back in Israel. And basically, what we thought, or what we said, or what we discovered was that when you were buying stuff over the internet, whatever it is or whatever it was, you're doing it with a credit card. And once you buy something, if there's some kind of fraud, because you are buyer or purchase it with a credit card, you're always secure. You're always protected. Most of the time, you're always protected. So there's no problem. The problem comes when you are selling over the internet. And if you're selling, for instance, bottles of wine and people are telling you that they're not arriving, you need to either send them again or you need to pay some kind of fee of punishment, yeah, to Visa, Mastercard, American Express, whatever, because the customers are reporting that in your particular shop there's fraud happening. Yeah. And after 50 times, 100 times, at one point, those big companies will not allow you to receive payments from their customers. So we saw that particular problem and we say we can build something to protect merchants. And that is how it started. Now, I come from the commercial side. Yeah. And basically, my area was not building the product itself. My area was helping the product scale and finding the customers and finding the investors. So at the end, we partner or we made a partnership with another colleague. So we were the three of us. We started building the company. And at the very beginning, we sat down and said basically three or four different things. Where do we want to go? Exactly what do we want to reach? What don't we want to reach? Yeah. And when are we going to be happy with this journey and what is going to make us unhappy? And you can compare this a little bit like, I mean, I'm not,
Can you give some specifics so that
yeah, of
there's a bit more
course. Yeah,
color?
definitely. Like, for instance, it's going to make us happy if we can sell the company from 250 million euros and up. Anything below 250 million euros is not going to make us happy. And for instance, also, it's going to make us happy if we reach certain KPIs. Yeah. If we sell the company in the very first 7 years of existence of the company. Anything above that is not going to make us happy. So a little bit like, and I don't know if anyone in your audience or maybe even you or someone else can relate to this prenup marriage contracts. Yeah.
Mhm.
When do we know that the marriage is not working? Pretty much in that direction. So we set up some things that were like indicators of it's not working for us. And basically we started building the product, building the company and so on. And to maybe answer the last question that you ask, what happened with it? Yeah. So what happened with it is basically that we started growing, but we didn't grow to the speed, to the pace that we wanted. Yeah. And at one point, when you look at our business plan, that which you always adapt, but when you look at our business plan and you look at where we were, there was a difference maybe about, I don't know, 20 customers. Then 6 months later, there was a difference of not 20 customers, but maybe 50 customers. And maybe 1 year later, there was a difference not about 20 customers, but 100 customers. And then we said, we are not in a point where we want to be, and we're not going to reach the place that we want to be from the very beginning. Then, and that on that point, we talked to our investors because we had 5 or 6 different investors that had put around 200,000 euros. And then the question was, do we want to continue? Do we want to raise more money? Do we want to close it? Do we want to sell it? We tried a couple of things, but no one wanted to continue. So we decided to basically
Mhm.
close the company. Yeah. And it hurt a lot because at the end, it was 200,000 euros that we invested in that. Yeah. From investors, but also from our own pockets. And that's what it is. Not everything is successful. As I said,
Yeah,
1 in 10 is going to be successful, and everyone else is going to lose their money.
sure. I would actually be curious, like on the so let's say you go to your investors, and at some point you're going to have the conversation that it's not going to work out anymore. Um, like, do you like propose scenarios to them, like either we raise more money or we stop, or did you go immediately with a scenario and said, "Hey, sorry."
Yeah, yeah,
How did that
that's
work?
a,
It
that's a
could
great
also like from managing a relationship, right? Because I guess
yes.
you don't want to be, the kind of person that, yeah, sorry, not going to happen anymore.
No, no, no. I think it's actually a great point, and there are many things in here that you mentioned that are important to rescue. First of all, is this is a conversation that you are having all of the time. Yeah, and I can say, and maybe again, this is myself, this is me, this is Juan Ocampo. We had a monthly call with our investors. So they more all of the time from the very beginning, they know when is it going well, when is it going not so well or wrong or bad. Yeah. We will have a transparency with them. So they were taking through the journey of we are trying this, it's not working. We're trying this.
Is it, sorry to interrupt, but is it fair to say that when it was done, it was not a surprise that it was done?
Exactly. Yeah. It's not like, honey, I don't love you anymore. I met someone else, but it's like there was a process of going through this. And that is one of the things that I would like to rescue. The second thing that I would like to rescue that you mentioned is scenarios. Yes. Excellent. Scenarios are always be taken with investors. When you have a communication with your investor, you should be talking always about at least three scenarios. Always, all of the time. This is what we are going to be doing in the next 3 to 6 months. If everything goes according to plan, as how we are right now, this is the plan B of what we will do and what we will change in 3 months. If we see in 3 months nothing is going to work out, and if nothing works out. Yeah. This is the scenario that we don't want to go, but this is the scenario that we will go. Yeah. So they should always know what you're thinking. They should always know what you want to try. And also when it's also hurting for you. Yeah. In
Mhm.
which moment it's going to be a little bit like painful also for the founder. So from that perspective, Diogo, when we started seeing problems in that disparity between how much we want to grow and where we are, they were told these are the five scenarios that we see. Yeah. And we went through all the scenarios. Yeah. And at one point there were no more scenarios in there. So yeah, you should always have a very open communication with them, and also maybe g- also touching one last point, I also work as an investor. Yeah. Working as a bad founder, what we call a bad founder, or living in bad terms. Yeah. Was also not something that would have a benefit for me, because I still work as an investor. Yeah. That burns a little bit my career in the investment or investor type or sites, if I also work as
Mhm.
a bad founder. So that's also a little bit
Can you, like, I feel that there's a bit more context there than what you're sharing. Like, what does it mean to be a bad founder?
so normally
And if you, and as always, like, if you can give specifics to an
happy,
experience that you had before,
happy,
like
yeah.
how, and also like how you dealt with that bad founder.
So normally there's at one point in the growth stage, or when you're growing a company, there will be one point in time where there's a lot of contracts being put on the table. Yeah. Because the more money people bring, they bring contracts with them and say, this is what you can do with the money, and so on and so on. In those contracts, yeah, when maybe the company has a little bit of maturity, there's already something that we call a bad lever clause or a good lever clause. Yeah. And it's basically two definitions where you define and say, if the founder needs to leave, because maybe imagine, yeah, you're a founder, you have children, and it's gonna be a very sad situation, but you have children, one of the children gets cancer. Yeah. You don't have any more time, or you don't have any more energy, or you don't have anything, like something happened so bad to your family that you need to exit the company. Yeah. But you exit the company in good terms, meaning You look for someone that's going to take over. You also are part of giving the company back and so on. That is something that we call a good leader. Yeah. So a good leader has specific elements of being responsible with the money of everyone else.
Mhm.
Then you also have the definition of a bad leader. And a bad leader is someone that will just disappear. Yeah. Or that will be someone that is not cooperative with the investment group and so on. So, from this perspective, what I was saying is I didn't want to be a bad leader. I didn't want to be a bad founder and saying, I did not communicate with my investors. I did not communicate this and that because I don't want to be have the stamp
Listen.
of being a bad founder because I still work in the investment ecosystem. Yeah. So
Yeah.
it will be a little bit like a double face. Yeah. How can you be an investor bad, but you are a bad founder? So from that perspective, it you need to take it the two ways. Yeah. So as I say, it makes me a much better investor to have the experiences of a founder. It makes me a good investor to be a good leader, yeah, or a good founder. It needs to be on the other. It doesn't work just on the benefit for me. It also has the responsibility part.
Okay. Um, I wanted to circle back, right? Because if I'm piecing here the story, right? You guys started, you had milestones and goals that you wanted to achieve. At some point, you realized that you didn't reach them, but you also mentioned something specific, which was that there was a delta over time of the customers that you would have liked to get, and you didn't in the end, right?
Yeah,
So I would be interested in understanding this a bit over time. I, I, I I don't care so much about the causes. I don't think that's what I think is more what at each turn, what were you doing differently? And like what happened, right? So you reach here, okay, we have a 20 delta in 20 customer delta. What are we doing? Then it increases. Okay, what are we doing? Like, how was this working? And like, what were you betting on?
sure. I think it's a great question because at the end, also when investors come to you and tell you there's no more money in the bank account, do you want more money? And then you should theoretically, most of the time you would say, yes, I need more money, right? But then the question is for what? What are you going to be doing different? Yeah.
Sorry, I want my question was more not in the sense of capital, but
Yeah.
more in a sense, what were you doing differently to get more customers?
Yes. And this is what I'm where I'm going to.
Okay.
Like at the very end of the company, one of the investors said, I can put 100,000 more. But then we were like, yes, but I have no idea what to do different. Yeah.
Okay.
So we arrived as a team to the point of it's not about the money right now. It's about like we have no idea what needs to be different for us to have a different result. So
Mhm.
basically the biggest problem was that we didn't find as you can imagine, the as fast as possible or with not a lot of money, yeah, and new customers. And basically we were trying to understand what is the best way for us to find our customers. Yeah. Do we call them over the phone? Do we find them on events? Is it something about customers referring customers? Do we need partnerships and so on? So we try different things, and we had a list of maybe 40 different ideas of where to find customers and how to find them,
Mhm.
and then we were trying all of those in the list. Yeah.
Mhm. So just for a context, if I understood correctly, out of everything you had B2B service as a software that
Yeah.
aim to prevent costs for companies, right? For e-commerce companies.
Yes.
Um, if you were to rank like the top 3 to top 5 techniques that actually got you results, and then I would also be interested in the opposite, right? So stuff that you tried that you thought was going to work, but in the end, it didn't. Like Jesse, just as I know that you have a question, I'll circle back to your question in a little bit.
Okay, wonderful. We have a question already. All right. So that's a good question. So we were working with owners of shops, of online shops, right? So basically, I would say that I'm going to start with what didn't work. What didn't work was trying to approach any kind of shop owner. Yeah. Of whether Diogo, you were selling maybe, I don't know, uh, bottles, and then our friend Felipe is selling, I don't know, maybe photography cases, and then our friend Alex is selling something else. Trying to approach anyone selling something did not work. Yeah. Why? Because the motivations behind you selling something were very very different in all three of the cases. Yeah. And this is something that it didn't approach us very fast to our customers. Trying to understand why and what kind of seller you were, that helped us to be a little bit closer to people that really were interested in selling and not just were testing as a shop, which is where we lost a lot of time, Diogo. We lost a lot of time with people that had open a web shop on Shopify or whatever. Yeah. And they were not really putting a lot of time in that shop. That they had it on the site and they were just maybe selling whatever they were selling, but not really investing their time as shop owners.
So
We
if I understand correctly, so basically you thought, okay, you have new shop owners, they're going to figure out that they have a problem very, very soon, but they don't have a solution yet. Therefore, it's going to be a piece of cake selling. But then
but they
again,
didn't do anything. Yeah,
but then most companies that go bankrupt are the ones that are newly founded, and
exactly.
therefore you discovered that
Yes.
yeah, it's a hit or miss.
One particular case. The other particular case is, we had also access to a lot of shops that were created during the pandemic, and during the pandemic, everyone was a founder. Yeah, everyone opened their shops. So we lost also a lot of time in the communication with people that were no longer mentally in that particular place where they wanted to be. Yeah. And if I may say, if I may add maybe one a little bit thing that we did wrong is, we at the end, I would say, we had the issue that happens to a lot of people, that they need to educate their customer. Yeah. So it's also this customer education process. Yeah. It was also very fatal, I would say, to our company in that. Yeah. So yes.
Just adding some color here on the part about educating customers, but basically, when you're trying to sell something, there's a framework that goes, something like this, right? So there's the people that know that they have a problem.
Exactly.
There's the people that understand that they could have a problem but are not looking for a solution, and then there's the people that don't know they have a problem but actually do, and then you gotta convince them that they have a problem.
Diogo, this is
This
why.
last one is very tricky.
Yes, and this is why it was you spoke directly to my heart in last episode when you were telling your people that were in the conversation, that tell you that people that are going to find you, yeah, organically, is because they're looking for you. They're already looking for you, but actually you want to sell to the people that are not looking for you yet, right? That's a big part of the pie. So this is where it was a little bit one of the big issues why we were not as fast as we needed to be. Yeah. And we understood at one point, time is ticking. Yeah. Time is ticking. And from an investor's perspective, because from the three founders, two of us were investors. One of them was not. Two of us, we already knew this is getting less and less attractive for venture capital. Yeah, with every second that passes is getting less attractive. And we are going into a point where people ask us, but you're kind of old as a company. Why are you so small? You know? So
This is actually a great segue to Jesse's question. I'm going to put it here on the screen here as well. Basically, he asks, how to consider the relationship, right? Because if you think from the perspective of an employee, you cannot really tell HR about anything that you have, right? Because it might get you in some troubles,
Yeah.
right? So I think the question goes in the sense like, what do you tell and what don't you tell?
So I think there's a few things in here that you can do that I can recommend. That I actually recommend. I actually there's one class that I teach in a business school in Lithuania, ISM. It's called the business school, and there's in that particular class I teach about investor relationships and how, for instance, I had one particular investment many years ago where the founder and us, we closed a contract. It was one page, yeah, where it practically say, I, the founder, I commit to, and then tack, 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 yeah. And there were commitments to like specific things about a reporting per month, but also I commit to receive feedback in a positive way. I commit to react to feedback like this and that, and also from an investor perspective. And that actually was a really eye opener, that at the end, we are investors, founders, companies, and so on, but it's people behind. Yeah. I am a person, they are people. So I really like that. And from that moment and on, which I think it was our fourth or fifth investment, we kind of closed that kind of contract with every founder that we had in our company, in our venture capital. Now, that's on the one side. On the other side, you cannot bring HR to a conversation, but you can bring another investor to the conversation. You're not alone. It's not one to one. If you have many different investors, you can also talk to other investors and say, hey, the dynamic is not working. And I will tell you, most of the time, they already notice that there might be that the dynamic with one particular investor is not always working. Yeah. It is not going to be that you work against that person, but you got to find a way to mediate. Yeah. How you work with those investors or with those founders that you also have toxic founders. Yeah. That it's going to be working for everyone in the circle.
Mm-hmm.
Everyone is interested that that works out. It's a lot of money on the table.
I guess in the end, it's about the incentives, right? So when someone puts money on you and when, you're working with that person's money, but you also are investing your own time, you have the same kind of incentive. And then
Yes.
if you actually have here the comparison of HR, the incentives are different, right? So of course, HR has the KPI of employee satisfaction, but HR is a representative of the company. It's not your representative. So
True.
that would always be a little bit different in that scenario, because
Sure. That
as much as they want to have your best interest at heart, they are mandated to have the company's best interests at
that
heart.
is true.
So that's a part where there's a misalignment
Yeah.
in the incentives.
That is true. I completely agree that that is true. But in the case of the investors, normally, because it's not always the first time that they invest together. Yeah, the ecosystem is very small, so we know each other. Yeah, most of the time, what you're trying to achieve is you're trying to mediate. Yeah, that no one feels being advantage at the end, because also it's not going to be the only time where you found a company. And it might be that this company is not going to be successful, but maybe the next one it will be. And they want to be part of that particular journey. So this is why investors will say there's an incentive to have it as less damaging as possible.
Yeah, got it. Okay. We have another question. I'm going to put it here at the same time. Juan, I would say that you can slowly, potentially share your screen as
Okay.
we're going in that direction. Um, it has been so far very interesting, but we are seriously going above on time,
Yes.
especially your time. Therefore, I guess we also need to go there to also take advantage of the presentation that you took time and care into preparing. And let me also put this on here on the screen. But basically, given the volume of organizations companies he has founded, what kind of intuition is involved with knowing, believing an idea is worth pursuing? I'm thinking back on our conversation with a startup expert where we talked about checking how many people feel the use case you're trying to address exists as an actual problem. Actually, give some context here. So this was a conversation. Oh, by the way, on YouTube, link to that conversation here. And for on that conversation, she was discussing that when it comes to defining a startup, when it comes to the assumptions, like you gotta drill down until you have, a tangible group of people that could be your customers or your users. And then I guess the question to you here is, what kind of intuition is involved with knowing slash believing that the idea is pursuing, which I guess is very connected to the presentation that you are going to do, because
Yeah.
as you shared to me, and let me give you a brief presentation, is about understanding whether something is worth investing on and what kind of red flags venture capitalists are looking into before investing. So I
And
guess I
also,
would let you, present or, sorry, answer the question first.
yes, yes. So to answer the question, and I say a little bit about that in the presentation. I would say it's not about the intuition, or maybe venture capital investors make you feel it's about their intuition of whether they know that something will work out or won't work out. From my perspective, it is a little bit more about understanding whether the topic that you are trying to sell them, even though it's in the area of where they invest, whether they want to be part of it or do not want to be part of it. And I can tell you, I invest in real estate technology. A lot of people bring me a lot of different topics, and sometimes they bring me something that is called BIM, yeah, which is building information modeling, which comes from the construction part. It is something that definitely the industry needs. It is something that definitely it will work out. But I, as an investor, I don't want to be part of it. So most of the time, people interpret my no or my lack of interest as I say, it's not going to work out. No, it's not that it's not going to work out. It's I and what I do with my money and what I do with this company, I don't want to be part of trying to figure out whether that's going to work out and how it's going to work out. And that is something where I would say we kind of give the wrong message in that particular case. I don't think it's about that intuition per se. It's not really about that. It's really about the people that you're presenting the topic to. Are they really interested in that specific area of what you're showing them? And maybe I hope I answer the question right now. If not, I'll try to answer it within the next slides. Maybe to give you a little bit of information about us. Hyras Ventures, we were founded in 2018. We have around 20 plus investments, 3 exits in our portfolio. And from those 3 exits, basically it's 3 engineers and 3 people that are working in this company. And what I want to talk about in the next few slides, and I will try also to not overextend the time, is about 3 key messages. Number one, it is very important that you identify what is the sweet spot of the person that I have in front of me, of that particular investor. This is what I'm saying. Is it normally a topic that they like, or is it a topic that they dislike? Also a little bit confront red flags. There are red flags that from the investor perspective we see on the investment or in the potential investments, and then stay away of it. And then the third point is I want to share, and this is something that I actually Diogo already talked about it a little bit. I want to share from my perspective. Yeah, this is just from my perspective. What is the most important slide in a pitch deck? Out of all the 15 different topics that you have in a pitch deck, what is from the investor's perspective one of the most important ones? in early stage investment. So the vision pretty much, so just so you understand from High Rise Ventures, is that we know or we understand there's a huge trend in Europe to build the most intelligent, smartest building from all. Yeah. The biggest problem that we have in Europe is that all of the buildings are already built. 80-90% of the buildings that we have in Europe that we're going to be using in the next 50 years are already there. We're not going to build new buildings, which is why we cannot invest, or we shouldn't invest a lot of time and money and energy in the most smartest building. We need to make sure to put technology in the buildings that we have right now. Now, we are a three people venture capital. One of the most important topics for us, because we are three engineers, two women and myself, was also to empower women. We already knew also that 60% of the women or 60% of the startups in Germany were founded by women, and with an average of 35 years old. And then we knew that at Europe wide, this number was not higher, that we were presenting one of the highest numbers, which is why we also made it one of the most important things for us to make sure that we have more women in tech and more women in this kind of places. One of the topics that was also a huge problem for us as a venture capital, and again, you can see the similarity between a venture capital investor and a startup, was we needed to educate our customers. There was not there was not a definition of Proptech, something that we all understood what Proptech means, and Proptech comes from property and technology. Yeah. And there were a lot of people saying, and this, you can see this quota also from like other places where about, for instance, AI, or you can see it on blockchain and so on. Yeah. And they would say this kind of technology is
This is a quote here on the slide. Who are you quoting?
the thing is, there's a lot of people saying that they were the first
Okay.
saying that. This is why you will see it. If you can take these quotes and then just remove PropTech and just leave the quote, and you'll find it from AI, for blockchain, for a lot of different things. But basically, what this quota is saying is that there are some some areas, some industries, and you can see it with generative AI also. A few months ago, everyone was talking about it. Everyone was saying that everyone was doing it, but no one really knew what it was really about. And this is a little bit what was happening when we entered PropTech, because what we were seeing is that no one could define it, no one could understand really what was the advantage of having it, and we had some trouble making sure that people would understand what it was. So one of the things that allowed me, of taking this trouble and taking this huge mess and trying to put order on it, was that I did some academic work in it. One of the points was trying to accomplish my PhD in that particular area. And basically, what I want to show you right now is how the very early workflow of our venture capital started. We took one of the white walls that we had in the office. We put tape, the blue tape on it. We put the different phases, and what the first phase was pitch review. Then we would have a call with them. Then we will do some due diligence work, meaning we will go and see the contracts, see that everything was in order. We will have a negotiation, and very, very important, each one of these phases would have a go or no go, meaning if we see something happening in this particular phase, being the review of the pitch deck, being the call or the due diligence, we would say stop. We don't go further because we saw something that we didn't like. And this is what we call the 5 steps of go and no go. And this is how it looked like a little bit. We would have on the very first part, the first contact, you see go and no go, the first call, the due diligence, and so on. And this is how we started at the very beginning. Let's say the very first 12 months of life of our funds, of our venture capital. Yeah. What kind of no goes or red flags we would have? For instance, yeah, we would look at what is the most attractive fact of what we are looking at, the documentation, the pitch deck. What is the most interesting fact? Can we help them? Yeah, we are three engineers. We have experience here. We have contacts there. Are we able to help them? And is it out of our area of our interest? Is it something that we just don't like? And again, coming to the specific example of we didn't like BIM as a topic. It's not a topic that we are into. It's not a topic that we like it. We didn't like blockchain also. Anything coming with like blockchain, very bold, very very main part of the pitch deck, we also didn't like it. This is why it's not that we didn't believe that that particular topic is gonna work or will not work. We were so out of the topic of the area that we just didn't want to be part of it. And when we got the feedback, I remember there were a lot of founders that, they were trying to initiate the fight with me or the discussion of whether blockchain was going to save the world or not save the world. Maybe it was going to save the world, but from our perspective, we just didn't want to get into bet with that particular topic. I don't know if I'm making myself clear in that particular point, Diogo, that it's just so out of what we do that we just don't want to go into it.
Yeah, I mean, it's like you don't necessarily want to do some stuff. It's like I think cooking is fun. Yes. Do I want to open a restaurant? No.
Exactly. Yes. Exactly. Yes. I think techno is fun. Do I want to go and dance to it? Maybe not. You know what I mean? So from that particular, and this is why it's very important to address that question that was asked about the intuition. It's not always intuition. Do not always believe what investors say as something as they have the truth or they know it's going to work or not going to work. It's something much more about, do they really want to, put their money in there? In the first call, we would look at the focus markets, for instance. How fast do they want to go international? Is it something that they want to do very early? Do they want to do it with our money? Do they want to do it in the next 3 years? Depending on what they would show. We were a very local venture capital, meaning our customers and the money that we were investing, it came from the German speaking region of Europe, Austria, Switzerland, and Germany. So as when we saw, for instance, that in the very first 5 years, they wanted to go international and wanted to go to Paris, or they wanted to go to Denmark, or they wanted to go to places where we cannot help them, we thought it is not an investment where we want to put our money to. Again, we're not saying it's not going to work. We're not saying
is this because of the specific area of interest that's connected to building, right?
that is correct. That is because of how we were built and how where our money came from. And again, we had a lot of discussions with people that say, no, we think it is the right way to do it, and like we will be able to have entire Germany in 3 years. No, we didn't believe that. We knew how Germany, how slow it is in technology adoption. So we knew it's not going to happen the way that they thought it was going to happen. So we didn't believe in that. When we were doing the due diligence, if they didn't have their structure ready, if every time we send them an email, they would take days or weeks to answer back with the pitch deck, the business plan, if they were not ready for a fast process of communication, it was something that we said we lost completely interest and we didn't pursue that investment. It was very, very common that we stop ourselves and thought, do I imagine working with this founder for the next 5 years? And many times we said, no, we cannot imagine continuing working with this person for 5 years. So we stopped the investment negotiation. So we were all very people oriented in that particular uh, situation. We wanted to understand the people that we're having a negotiation with is someone that we want to work with, is someone that we have trust, is someone that we think they're really going to make it. And maybe just as a general perspective, this is the end of our second year. Our second year, we had 8 different investments, and this is how it looked by the end of the 6th year. 20 different investments, or around 20 different investments. Right now we have 23, 24 different investments. We are already on we already stopped the new investments, so we're not investing in new companies. We're just making sure that the places where we invested
Can you
are
just
all.
share some color? What does this slide represent? Because I feel that there's like a unique story here, but I
Yes.
cannot grasp it.
So we built we invest for the built environment, so for buildings, and basically there are 3 different colors or categories for our investments. There is the category that we called creating healthy environments, and in these environments we're talking about sensors for room climate and sensors for instance, the silver market, elderly people in apartments and like living alone and so on. The second part, or the second category, is called making processes more efficient. So anything that will digitalize processes in Hausverwaltungen, or like the management of apartments, management of offices, was the second category. And then the third category is what we called new types of utilization, and that is basically finding new revenue streams for real estate spaces that are going to be, for instance, renovated, or they're going to happen. They're gonna go through some kind of transformation process, and you need to find some new revenue streams. So what we wanted to achieve in here is to show to our investors, yeah, the people that gave us money, that we built an ecosystem for them, that it can be out of construction sites, it can be for apartments, it can be for offices, it can be for shopping malls and so on. So the what we wanted to achieve is, look, yeah, there is an ecosystem that can work, some startups with other startups, and can bring more value at the end to your particular portfolio, because the people that own real estate, they normally own in different areas. They just don't own residential spaces. Sometimes they also own of offices, they own shopping malls, they own hospitals, hotels, and it's very important for them that they can have an ecosystem where everything is working with one another. Yeah. So I tried very quickly to tell you a little bit about the sweet spots. Yeah. All of the investors, they tell you sometimes explicitly, sometimes not so explicitly, but it's on the website what kind of topics they like. Where is the sweet spot? I already told you a little bit also about the red flags that we didn't like to see, or to be part of when we were looking at the investment types. Now, let me tell you a little bit of what I think. Again, this is my own opinion. Yeah, what the main slide in the deck, which one it is, and this is actually, you already asked about it, Diogo, at the very beginning. You said, what are the different things that you tried as a founder? Yeah, and what were you trying different every time that you realize is not working? What is it what you are trying different? And from my perspective, yeah, the most important slide that you have is the one that you show the investors what are your efforts and exactly what you are doing in order to achieve your customer acquisition costs. So if you say, hypothesis one is I'm going to find customers by doing cold calling. Yeah. Let's say you want to start in there. Then you document that for cold calling, you did A, B, and C, and this is what it costs. These are the costs generated for this particular hypothesis. So what are your sales hypotheses basically? How will you find, how will you convert customers, and how you will scale? And that is every time that we raise money, yeah, me as a founder, every time I raise money, the slide where I would have the most fruitful discussion with investors was a slide where I would show them exactly what kind of efforts I've been doing, what kind of activities, how much I'm investing in those kind of activities, and whether I think or not that this is going to be one of the channels where I can gain a lot of customers or not. And you need to document this for everything that you're doing, mainly in early stage, because it's not clear exactly what will work. You need to have a very strong sales hypothesis slide. Yeah. This will be my 2 cents, Diogo, from early stage fundraising. I don't know if there's anything that you would like me to go a little bit deeper into.
Yes, I do have a couple of questions. Just one tiny side note. Can actually, can I do it? But you can stop screen sharing, I guess, now. But basically, for the people who are watching this on YouTube, this is going to be the end for you, as this final part of question is just for people in the community. So, of course, if you want to join the community, there's a link in the description of this video. And otherwise, I hope you enjoyed this.